Okay, moving along this afternoon. Next, we have Raye. Vic joined IDC Worldsource in 2019 and is based out of our Vancouver office and is our National Director of Banking Services. He is responsible for providing leadership support to expand the banking business of our advisors. He has held a number of important roles at the MGA, MFDA, and IROC firms over the past 30 years. Originally from Toronto, he has helped advisors coast to coast integrate banking services into their practice and develop alternative revenue streams. To speak about client-led opportunities and to turbocharge your revenue, please welcome Vic Raye. Vic, take it away.
And welcome everyone across Canada to Banking 2022 as I walk us through our best banking ideas for your practice to turbocharge your revenue. Here's a quick little overview of what the next 20 minutes is going to look like. First, a little update in terms of our overall thought process on banking. We'll then go into the three main components of banking, which is online client name bank accounts, mortgage referrals, and non-mortgage lending. And I want to emphasize at this early stage even that banking is really both a product and a strategy for your practice, as you'll see as we go through this session. And then we'll end off with a bank partner overview and a couple of key upcoming dates for you. I think we actually have 3 key upcoming dates that I want to make sure that you're aware of. Lastly, before we continue, if you are a duly licensed life advisor, so that is MFDA, IROC, exempt market dealer, please ensure that you follow your dealer's guidelines regarding the use of any lending strategies for your clients. All righty, so let's just jump right in and talk a little bit about our overall thought process on banking. The question that came to mind to us 2.5 years ago now, almost 3 when I joined IDC, is how can banking help you create a winning atmosphere for your clients? And the answer to that question is literally right here. All of these bullet points that you're about to see as you see them. Essentially, although we've gone through a lot of change in this industry, even before COVID, the main keys to advisor success have really remained the same. And this is the only time that I'll probably be able to use any French, since this is a cross-country presentation. Plus ça change, plus c'est la même chose. The more things change, the more they remain the same. It still comes down to finding prospects, leads, attracting, engaging, and converting them from prospects to clients, and then working on case size, revenue per client to make yourselves as efficient as possible. So with that as a constant in our industry, we believe that since the introduction of CASEL back in 2014, incorporating banking has great value as a key success factor for independent advisors. And to do it on a large scale as well, not reactively or just on a select basis, that it's something that in order to do its job correctly, the way it essentially has done for the big banks to help them cross-sell wealth management services, it needs to be done on a large scale. It's a classic textbook financial services marketing strategy, and it's based on the concept that banking is bought versus sold. The industry adage is that insurance investments are sold and not bought. And even in a digital age, it's still very much that way. Whereas banking is and has been and continues to be bought as a consumer product, the way any other consumer product would be when you go to a grocery store, for example. So consumers have no hesitation whatsoever about opening up their own bank accounts, doing their own lending, and so forth. So this is what we mean by client-led, and this is a theme that you'll hear throughout the presentation today about banking being client-led, that the clients will essentially come to you. And this then brings in the statement that banking is both a product and a strategy. There is a client-led retail store within every advisor-led practice. And so all you have to do is, if you build awareness, that client and prospect demand and the revenue will come. And some of you may recall that about 2.5 years ago, shortly after I joined, we came up with this tagline, the right banking relationship, choice service solution. It's a tagline that you're welcome to use. We've created it for you to capture all of the points on this slide and the underlying motivation for clients in order to do more banking. You can use this on your own letterhead when you send out any communication involving banking to your clients, and we encourage you to do so. So the question that came after this, as we took this on the road 2.5 years ago, is do you have a banking strategy for your practice? And I remember having great presentations, great sessions at the kickoffs going back a couple of years now, where we talked about atmosphere and confidence. We talked about revenue and referrals. And so our thoughts here are that we've actually achieved a lot now in those 2.5 years, because in 2021, it's just thrilling for us to see the increasing numbers of advisors who have showed us how easy it is. And it's actually even easier than we thought. The two keys are build banking into your overall client communications plan across all segments: employees, professionals, business owners, retirees, as part of your overall 2022 business plan to focus on banking. Second key point, for your first few big complex seg fund or insurance lending cases, so I'm talking about things like the retained earnings strategy that Alex Chan talked about yesterday, or IFAs, you really need to bring in your IDC WIN team and your bankers in early. And then a point that I'll be talking about in a little bit further in the presentation is to consider partnering with the IDC WIN tax and estate planning team on IFAs in particular. With today's tools, it's become even clearer to me than it was 2.5 years ago, and to all of us at IDC, that with today's tools, you can do far more banking volume in far less time than advisors could 2 to 3 years ago. And so I'm going to talk a little bit about that in a bit more detail now, using as an example bank accounts. So we're going to talk about client name, online operating bank accounts. There's over $700 billion in bank accounts, about 400 billion of it, of which is in 0% checking accounts. The sources for this are Manulife Bank, Investor Economics. The Manulife Bank Advantage account is the client name, the only client name off-book online high interest operating bank account available to you as independent advisors. And I have to say at this point, before I continue, that if this comes across as though it's a blatant push for this particular product, I'm happy to say that it is. I consider this to be the most untapped, greatest opportunity for all advisors to be able to tap into. And trust me when I say, when I look at the names of advisors who are using this service, we are seeing some of our absolute top advisors taking advantage of what I'm about to tell you. The key here are the higher promo rates that Manulife Bank occasionally offers from time to time, usually in the spring, April, May, June, usually, where they offer a higher rate. And oftentimes this is met with criticism. Well, why is it only for 4 months? Well, the whole point of this strategy is to reveal major cash holdings that you may not be aware of. And if there's one thing that successful advisors have been able to do and have mastered, is the ability to find cash wherever it may be. So the question becomes, who would you rather talk to? If you only have a limited amount of time to talk about anything, would you rather do it with 10 people who have $200,000 sitting in an Advantage account, or would you rather do it with just 10 of your clients or prospects at random? Manulife Bank has really nailed this area, and it's a regulatory win as well, because I'm not aware of any other bank that would even allow an advisor to be put on a client name operating bank account as an advisor of record to even see the balances, which is a huge, huge strategic regulatory win for all of us. And in September of 2021, Financial Post did name Manulife Bank as the best bank for small businesses, and we've seen some superb business advantage accounts being opened, as well as the personal ones. Now, I want to just share with you how easy this is. The key to doing this that makes this so much easier than it ever was before is that Manulife Bank issues a personalized URL link for each advisor that allows your clients to apply for these special offers directly. And I just want to share with you how easy this is. A year ago, roughly in April, I responded to the click here for your personal URL button on the Manulife Bank promotion of a year ago. And I did that on Wednesday, April 28th at 12:24. 17 minutes later, as you can see here on the right, hi Vic, here you are, here is your link. they can't make it any easier. This is so easy to be able to do. I would encourage every advisor to do this with all of your clients so that you can see what their cash positions are. It's a marketing, truly a marketing gift. Let's move on then a little bit to non-mortgage lending. Again, continuing with our broader theme that banking is both a product and a strategy. And so by product, I should perhaps clarify what I mean by that. That's a product is something that meets a client need, first and foremost, and secondly, pays you some compensation. The strategy part is that, does it help then beyond that? Does it go beyond the revenue? Can it generate referrals? For example, does it do something better for your practice beyond that? And definitely the lending side is one of the top areas for that. When it comes to lending, it is very consumer-driven, consumer-led. And this is something that your clients are shopping around for all the time. Non-mortgage lending covers a wide range of areas, from seg fund purchases, seg fund purchases inside of RRSP and TFSAs. So we're looking at the loans for that. The retained earning strategy, again, that Alex mentioned yesterday, as well as plain leverage loans. We have new life policies, specifically the IFA strategy, or just accessing CSV in general for overall decumulation in retirement, general liquidity needs. In particular, again, Manulife Bank has really pioneered, and it's a signature product for them, the insured retirement program, both personal and corporate, as well as basic collateral loans. So this is an area that we've seen a huge uptick in the last couple of years, driven by COVID, as individuals lined up their lines of credit in event of an emergency. And the trend continues as interest rates are expected to perhaps go up later this year. One thing I have to say is that all of these non-mortgage lending strategies really are for the right type of client, the ones who are suitable for any type of investment-based or insurance-based leverage. One thing you need to keep in mind at all times is all of our banking partners are strategy neutral. So they will not endorse, nor will they discourage any of these strategies. So they aren't going to necessarily be at the table leading the charge here, but they're going to simply do their job, which is to get the best possible terms and interest rate for your client. Mortgage referrals. I want to talk a few minutes about this because this is a huge opportunity that we've seen, especially in 2021, again, with our partners, including BMO, where we've seen a huge increase in their referrals. Asking or assisting your existing clients as they shop in a do-it-yourself fragmented market is very, very helpful for the client. The value here to you is that these are very referable products and by friends, family, realtors. So we're talking about HELOCs, home equity lines of credit, standard traditional mortgages. This really helps to grow your prospect pipeline. And as a matter of fact, I'd like to just suggest to you that, not making the referral to the client, I think it just might, and it's my personal opinion, it just might look bad. I think that because people are trying to get the best deals they can on their mortgages, if they knew that you've got major banks, lenders calling upon you, ready to provide a great service, and you didn't pass that on to them, they just might go, really? You didn't let me know? I'm going to be talking to 3 or 4 banks. Why wouldn't I talk to one of the bankers that's trying to get business from you and knock on your door? They're maybe a little more entrepreneurial and can get a better deal for me. The 2 keys then to doing that in a volume way is to use our 2 client lending letters. And where possible, we would recommend also that you suggest more than 1 bank. A great question to ask your clients just at the end of a conversation that may have nothing to do with banking, that they may have called you about, or you may have reached out to them, is, by the way, how much shopping do you like doing for your major borrowing needs? And just see where the conversation takes you. The letters, by the way, that I've just referenced, I'll mention them here now. You can find them on the IDC WIN banking page on the idcwin.ca advisor portal. We have 2 versions. This letter on the left that just came up, although it's quite small and you can't read it, is there. It's positions all of the different banks with whom we can partner, whom you can partner. This is a great letter on which to use the logo, the tagline that I mentioned about the right banking relationship, so that it projects that this is a real business for you. The next one is just a simple short letter that talks about how important it is for clients to always look at opportunities at where they can save money, get a better deal on their major credit needs, and it's short and sweet and to the point. I think you'd love both of them. Just to finish off with mortgage referrals and some of our additional points here to solidify just how important referrals can be for your practice. These major credit needs, such as mortgages, they're big decisions for the client. It really does result in loyalty. It results in referrals from friends and family. In economics, I sort of like to call this the economic term I like to use for this is the multiplier effect. And we know of many advisors who have made a lot of revenue, far more revenue from the new clients they obtained as a result of a successful mortgage referral or major credit need, far beyond the revenue they made off the actual mortgage referral or the lending instrument itself. So this really is an untapped, still, in spite of the growth we've seen, a major untapped opportunity. Huge role for you in terms of lending as far as intergenerational wealth transfer. We're actually talking 3 generations now. It's the elderly clients who are perhaps in their 80s, their grown adult children who are in their 40s and mortgage heavy, and then their children. So we're talking with the grandchildren of some of your more elderly clients who may be looking at their first home. Great way to really wrap your arms around the entire, through all 3 generations. One last point, or one of my final points on mortgage referrals is please don't wait to call them until 6 months before they tell you their mortgage is renewing. As we've seen over the last couple of years with competitive interest rates, people's needs changing literally overnight, they will proceed, they will make a decision in 2 weeks and you'll miss the opportunity. So let's be proactive, continuous, within reason in terms of your banking communication across your client base, and make it simple and easy. And it will truly be, as you'll see, a very positive client-driven experience where they'll reach out to you. On an administrative note, I just want to say that you have to have a Manulife insurance or a BMO insurance selling code that may or may not be obvious. It's for the mortgage referrals apply to your existing clients only under the mortgage referral legislation in most of the provinces that's in place. And you would need client consent to be able to release their name to the lender. Alternatively, you could give the client the name of your local lenders at BMO or Manulife Bank. And a good goal to keep in mind is that our top 10 IDC contracted advisors have an average of 74 mortgages. And in some cases, it took these advisors 10, 12, 15 years to do this. With what we know now, with what we've learned, the more we now see how this works, we can get the 5-year time frame, we can get you to this in a 5-year time frame to achieve those goals. So what I'd like to be able to continue on with now then is just to highlight things that this will go very quickly now because we've actually talked about our RSP loans just last week. This is a quick recap of the 3 different strategies. We've got TFSA loans, which are a huge untapped market with a current lifetime limit of $81,500. And the investment loans that Alex talked about for retained earnings, I wanted you to have the actual link here and know exactly where it came from, so that you have everything here on one slide in one place. And it's a Manulife TREP strategy from May of 2021, and it's the exact link for you there on that slide. By the way, the key with our RSP loans, make sure they use that refund to pay back the loan. That refund to pay back the loan is very vital to the success of the program. We're not going to go through this really detailed chart. I just wanted you again to have everything and your fingertips here in this PowerPoint. It's on the IDC WIN banking webpage, and it's a summary of the main RRSP and TFSA loan options. Again, just a quick note here on this page that B2B Bank is the only bank that offers the TFSA loans. Just to continue on then with some non-mortgage lending ideas regarding IFA, market practices to consider for the IFA. I think this market is far more accessible by more advisors than is currently the case. The carriers, the banks have a lot of client-friendly pieces that you can build around to get that pipeline going. It's not always a straight line to the IFA. You can use other services, for example, so that business owners that you may want to just to get your foot in the door, to start the relationship, get that handshake that leads to a bigger relationship going. They may already have an IFA, for example, that you can transfer that they're not happy with the way it was structured. UL policies can have max funding opportunities that are well suited to an IFA, a midstream IFA. And there could be CSV lending in general. Again, the business advantage account, a huge, very simple bank account to be able to utilize. The RRSP catch-up loan is a big opportunity as well, given that many small business owners pass on their RRSP contributions until they achieve a certain level of success in their business. And lastly, just the simple HELOC, whether it's ReadyLine or Manulife One. Retain earnings to finance seg funds. Again, a great point yesterday by Alex to use that. And we really believe that teamwork is the key because very few advisors have 5 IFAs in place. So those of you who only have up to 4, let's say, please consider working with our IDC WIN tax and estate planning team. The golden rule here is that you will close more and you will do better if you can get 4 out of 8 versus 1 out of 8 by working in a partnership manner. And our team here consists of Brad, Frank, and Chris across the country. So I'm happy to let you know that they're there ready to work with you on those cases, and I work with them very closely where need be as well. This again is our IFA summary that talks about the summary of institutions and offerings. And I'm also happy to say that it's on the IDC WIN banking webpage right next to the RRSP and TFSA grid. Great news, Equitable Bank is launching a new IFA. Feb 3rd is the time of that session. And so we encourage you to join that call to get all the details. They have a great no additional collateral feature that I think will be a nice, refreshing breath of fresh air. There hasn't been a lot of change in the IFA market in many years, and this is a very welcome new development. So that's Feb 3rd with Equitable Bank. Lastly, I just wanted to summarize for you again, so you have everything on one nice slide, the various bank partners who are out there. And we've already covered a lot of these points, so I won't be going through everything here in detail for you. I just wanted to highlight that they're all here. Many of my talking points are listed there on the right. And the key dates that I also mentioned that I think are very important for you to consider attending are Feb 3rd, the Equitable Bank session, Feb 15, BMO mortgage referral webinar. And lastly, we'll be having a series of Manulife Bank local sessions in the spring with those dates to be announced as they will be local. So to recap, in conclusion, 2022 highlights. Banking is both a product and an asset gathering referral strategy for your practice. We're looking to build awareness and the prospect client demand and revenue will come. Advantage accounts, really can't go wrong there. And please continue working with Frank, Chris, and Brad across the country. Next steps, tomorrow morning, add some banking to your 2022 business plan. And with that, please call me as well. Thank you for partnering with us for any more further discussions that you may have about incorporating banking into your practice.